Good morning, traders, and welcome to BCR's morning market analysis. First up, let's have a look at the US dollar index. The DXY held below 99.3 on Thursday after touching a 2-week low of 98.98. With the government shutdown ending, markets expect delayed economic data to resume soon. Though the White House has warned that October jobs and CPI may not be released at all. Rate cut expectations for December have eased slightly, with markets now assigning a 60% possibility of a 25 basis point cut. ADP data earlier this week showed private employers cutting an average of 11,250 jobs per week in October, which has heightened labor market concerns. Technically, the dollar's rebound from 96.22 yearly low has stalled. The RSI at 52 signals weak momentum. Key resistance remains at 100, which is a psychological level, and the 200-day moving average, which is around 100.1, with a strong barrier at 100.36. On the downside, support is at 98.98, and the psychological level of 99. Next up, let's have a look at WTI crude oil, which trades near 58.6 after a sharp 4% drop on Wednesday. Pressure increased after an OPEC report projected that global supply and demand may reach full balance by 2026, shifting sentiment away from previous supply shortage expectations. OPEC pausing production increases for Q1 2026 offered limited support as earlier hikes continue to weigh on crude. The US government reopening could provide a mild lift to demand, but inventories remain high. The IEA's surprise shift, abandoning its long-held peak demand this decade forecast, added fresh uncertainty. Technically, crude is trapped between $60 resistance and the support area near 58.12, which is a recent low. Momentum is weak with the RSI at 40. If prices stay below $60 and the 9-day SMA at 59.71, the downside opens towards 57.31 and the psychological level of $57. Next up, let's have a look at gold, which has re-entered the spotlight after a 4% surge this week, breaking decisively above 41.60 and briefly touching 42.45, which is the highest since October 21. Spot gold hovered around 41.80 on Thursday as markets anticipate a wave of delayed US data after government reopening. Still, the White House warned that October employment and inflation data may not be released, adding more uncertainty, which is a supportive factor for gold. The broader macro narrative remains bullish. The yield curve's soft landing signal, falling real yields, and the safe haven demand continue to drive interest in gold. Technically, the uptrend is still intact. The RSI at 65.25 still shows room for upside. A daily close above 42.50 could open targets towards $4,300 and then the all-time high of 43.81. Support sits around the 41.61 mark, followed by the psychological level of $4,100. Lastly, let's have a look at the Australian dollar, which strengthened to around 65.80 on Thursday, reaching a 2-week high after Australia posted stronger than expected employment data. October saw 42,200 jobs added, more than double the expectation, while unemployment fell to 4.3%. The strong data sharply reduced expectations for further easing. The probability of a May 2026 rate cut dropped from nearly 70% to 32%. Improving consumer demand and housing sentiment also supported the currency. Technically, the Australian dollar is consolidating, but remains above the 10-day SMA at 65.21, showing short-term bullish strength. Upside targets include the psychological level of 66 cents, then 66.30 and 67.07. Support lies around the 65 to 1 level and the psychological level of 65 cents. Well, that's all for today's morning market analysis. Markets are in a wait and see mode as investors look toward the end of the US government shutdown and return of key economic data. As fresh data begins to flow again, we can expect clearer trends emerge and volatility to pick up again. As always, manage your risk and happy trading.